Welcome back to Trading 360. I'm Nicole Penelides, live in New York City. It's time now for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. And here to take us through the trades, Mike Shorr is with us, Director of Trading Education at Prosper Trading Academy. I'm glad you're both with us. Happy New Year. Let's get to obviously a big name, and that is Activision Blizzard. We love to talk about these video game makers. Mike, why is Activision Blizzard on your radar?
We got a really nice, now let's preface all of these by these were put together this morning. So the Q's being down 1 3/4%, but these are going to be triggered entries, meaning that we have to get to a certain price. So I kind of built that in there, but I'm looking at Activision to clear the swing high at 67.90. And then we're looking for, it's got a lot of room and really no resistance between there and the 100-day moving average. So I'm looking for a grinding type of move up with the 71 call calendar. That's January 14th versus January 28th. So if we get back up there, of course, you'll be able to buy it a lot cheaper, but I don't want it here. I want it with the confirmation move up.
I see. So you're waiting for the move there. Grinding higher is a possibility. Ben, your thoughts?
Hey, Mike. Happy New Year, Nicole. I'm looking at Activision and thinking this is a perfect example of what we hear about this Santa Claus rally. They've been on a tear to the upside and a little bit sideways recently to begin the year and into the end of December. But let's take a look first and foremost at the hourly time frame, because this is where I think we should begin with ATVI, some of the bid activity that we saw throughout the month of December. And while the run up from 55 all the way to the 68.10 level, we're just holding below that right now, but acceptance of the recent run up. We oftentimes talk about acceptance or rejection. And again, after you see a big move like this throughout the month of December and then a little bit of a pause, I think that could be very healthy, especially if we break out to the upside. Here's just a look at, again, that most recent run up from 55 up to 68. But let's take a look here and continue with the hourly time frame. So hourly candle still, but a little bit more time on this chart going back to, we're talking the beginning of November in this instance. Here's the move up that we just looked at from the beginning of December into the new year. But you can see how we're just kind of clawing back some of those losses, the price decay we saw in reaction to the earnings in the beginning of November, a little bit of disappointment there, and that move lower from 80 down to 55. So kind of clawing our way back at this point. The daily shows here, I don't have the 100-day moving average here on this chart, Mike. I can pull one up in a second, but the daily shows the move lower that we just talked about, 80 down, how it's just part of the bigger move off that 104 level into the December low again around 55. But I'm wondering if the bulls are going to be able to get this one back up and to fill the gap here, that big move lower in the middle of November. Quickly, I want to point out the weekly chart shows that, well, we're up, if this week, 5 weeks in a row to the upside, but look at the move lower that we've seen since mid-June here. We were only up something like 5 weeks out of 6 weeks, I think it was, out of 19 compared to 19 to the downside since the middle of June. So you can basically see some of the pressure they've been under, and that was just, again, as they broke out below 90 and came off the highs from 104. So Activision coming under pressure here, but trying to regain composure, if higher this week, up 5 in a row.
Right, and I think you make a great point about that sell-off that we have seen. It's trying to come back here, but a lot of the headlines really weighed on the company, right, pertaining to sexual harassment and conduct in the office. And if they can get that underway, right, and move forward and get it done, right, Mike, you could see it grinding higher. It's already making the move that it wants to head back up.
Exactly. That's, and so you can't be in the business of trying to pick bottoms here, and that's why I will sacrifice a bit of upside potential to wait for that confirmation. So I'm not saying to buy it here, but let's see if we can get through that level.
Yeah, talk about the numbers, Mike, one more time here as we're taking a look as you talk about this grind move up to resistance, whatever resistance you're really looking at, because it doesn't have any near-term resistance.
No, not near-term resistance, but the implied volatility through that 28th is targeting that 172 area, which is about where that 100-day moving average is. So I'm targeting a little bit below there. If we do get that full standard deviation move, that's not going to hurt our P&L too much, but ideally we want to go to that 171 area, or excuse me, just 71, not 71.
Yeah, I see what you're saying, and you could look there into mid and late January for those. Tell me, Ben, your thoughts on this.
Trying to get the 100-day moving average up. We have it here. We are holding below it. Let's pull it up. It's the blue line on this chart here. And you can see after breaking down below it, we really have, actually here, this is on the weekly here. So let's just get the daily time frame up. And there you can see it again, still holding below it, convincing below it, as mentioned below, since we broke down below 90 and through 80. So this is where it's going to come into play into the $72 level. This will be something to watch, I guess. Yeah, it could be one of the first indications that we're starting to regain composure here and start to build momentum to the upside. What I'm looking at is more this kind of area of consolidation. I'd like to see it up above 82.50, 85, but I like what Mike is talking about in terms of not trying to pick a bottom here and really looking for strength to kind of come back into play. You don't have to be the first back into this one. I'd rather see some momentum and some buy-side activity before I look to position to the long side here and look for some more upside momentum. And then again, you're looking for favorable locations once we do start to build momentum higher.
Yeah, and you both mentioned the 100-day moving average, and what's interesting is on the move up, the last few days have been choppy, a little bit of consolidation. It's not continuing that straight move up. It's sort of sitting in this area, so we'll have to wait and see. Let's get to your next name here on your radar, and that is Cloudflare, right? You're looking at this one, Mike, here. You're focusing on the 200-day on this one. Tell me a little bit about that.
Yeah, that was looking great before the market decided to give their opinion. We're well below. I believe that 200-day is down somewhere around 120. I think last time I looked before we went on the air, it was about 114, 115. But again, if we can regain that it was looking great for a spread, but that's why you always wait for that acceptance there. So I'm looking to play off of that 200 if we were to get back above there by selling. If we can get up there shortly, who knows what the Qs are going to do today. We may extend lower. But if we do get back above there, I'm looking at that 120, 122 put spread. If we get up there, that should be trading anywhere from, let's just say 85 cents. That's probably on the low end of where it'd be trading. In that case, you're not quite getting 1-to-1 reward to risk ratio on selling a put spread there, but you're getting, you risk 115 to make 85. So not a bad one, of course. Yeah. Completely different than down here, which means it's a no trade. That's why that's perfectly fine.
Yeah, I see what you're saying. I mean, the sell-off today is significant, down 9% on Cloudflare, but it's not just Cloudflare today. We're seeing a lot of these tech stocks in the NASDAQ 100, which is down 1.77% as rising yields are pressuring this group. So, in a few days, it might be a different picture. But for right now, you make a good point, Mike. We didn't expect a 9% sell-off on this name. Ben?
Might be a different picture, Nicole, if rates stop moving to the upside at the trajectory that they have been. Nobody wants to see spike to the extent that we've seen over the last couple days, and that's really, it seems to be what's weighing on some of these tech names in addition to some of the other concerns. But Cloudflare, you can see again falling victim to some of the selling and the broader base weakness across the board. We've seen down 9.5% today, all the way down to 113. But notice again, it wasn't just today, it wasn't just yesterday. This selling came into play last week, and that's why I pulled up this 5-minute time frame so we could just look at this move lower. And well, not what they wanted to see, investors, that is, on the bigger picture as well, not just over the last couple days. We'll talk about that in just a minute. But first and foremost, the 5-minute time frame, again, this move lower from 115, and especially how it accelerated over the last couple days. Look at the 60-minute time frame here, Nicole. You can see how this is just part of the bigger move lower from 222, and this breakout again out of this sideways consolidation that had been occurring over the last couple weeks around 135. So this is another vertical move here. Value again continues. They continue to look for value at a lower and lower level here and still have yet to find it. At some point, we'll see a stopping price. So I kind of look at the bigger picture when I'm trying to establish where things are. There's a little bit of a bottom down around the beginning of October from around 110. But in terms of the moving averages, the 50-day moving average, well below that. Mike was just talking about that 200-day moving average. Here I've got it in the blue line. You can see how we're kind of below that right now. It sounds like that's what Mike is waiting for us to get back up above. But I just wanted to point out here that, again, the weekly, if lower this week, it's only up 1 out of the last 7. So that really speaks to the magnitude of this move lower that we've seen off 221. And again, as you can see, holding below that 200-day still.
Yeah, and in March and in May, June over there, you see that it really held that 200-day moving average. So Mike, I know you look at both the 50-day, the 200-day, but it's imperative to you to make this trade, but it's contingent upon a certain action, right?
Yeah, exactly. That's the great thing about being a trader is that I can change my mind from bullish to bearish or nothing at all in a second. And where things were yesterday on the close or even pre-market this morning isn't necessarily going to dictate what I do during the day. But I do have my alert set there. And if we do get up there, if not, then there's thousands of other things to look at. But this was definitely signing up. And if the Qs had held their ground, then this would be a completely different story. But of course it's not, and that's where we just say, okay, great idea, move on.
Yeah. And let's move on to DocuSign here, because that was a darling during the pandemic, of course. And, we'll still have work from home, work from anywhere. People will likely still be using DocuSign in many ways. Tell me a little bit about your thoughts, Mike, on this one, because obviously, as you noted, the big gap to fill. It was quite the darling and then really fell off the cliff.
Yeah, I mean, that last earnings report was a one for the record books. I mean, I don't mean actual records, but probably as far as they were concerned, they were down, about 42%, something like that, if my math is right, on that earnings day. But we've seen, if anybody who pulls up a chart in that, if you don't see a consolidation pattern, I don't know what you're looking at. And so if we can break up above that, of course, everybody's looking at it. But if we get through that, there is air between there and where we closed last earnings. So I'm not trying to play that whole gap or anything like that, but I am looking for a full standard deviation move to the upside with that broken wing fly that you're about to talk about.
Yeah, and Ben, hold your thought just for a second. But Mike, just the big picture as the NASDAQ is continuing to sell off, right? And so these types of names are more in the NASDAQ realm, in the tech-heavy realm, in the fast momentum names. So as you're seeing the NASDAQ selling off 1.9% now, Mike, what's your big picture as you're seeing dramatic moves in these first couple of days? The Dow and the S&P hit records, and the NASDAQ's under pressure.
It never looks pretty, right? When you get down here, and it's we've said darkest before the dawn, or buy when there's blood in the streets. I mean, really nothing economically has changed. We do have, finally the TLT or whatever you look at for interest rates is finally showing that life that we've seen. But at some point, these weren't up there. These aren't completely out of nowhere expectations or anything like that. And interest rates are kind of, I guess what I'm actually saying is I'm solidly in that buy the dip. Now, does that mean just the next downtick? No, but I'm definitely looking at, so for example, in Docu, if we can clear that swing high off of that consolidation, we got lots of room. Not really high risk, certainly defined, but massive reward.
Right. So you're expecting this volatility to continue, and no surprise there. Ben, your thoughts on the DocuSign chart? Well, and Mike's trades.
I think you guys summed it up perfectly. Nicole, you said it was one of the darlings, the key word there being was, and if we can clear, Mike said, the key word there being if. We have yet to do that, and it has come off. It's fallen victim to some of the selling that's well, take a look at it, and we'll get into that. The DocuSign, first and foremost, 5-minute time frame shows that it recently has been sideways after some of the intense selling that had come into play. We've established a bit of a range, 160 down to 147. So we've got an upper and a lower extreme right now to keep an eye on in terms of gauging that next real directional conviction one way or the other. I think what's most notable here is with the broader base selling that Mike was just talking about in terms of the NASDAQ and how he thinks, again, it could be a buying opportunity ultimately. Well, we have yet to take out the lows from earlier this week, last week, even the week before, I should say. So again, just pointing out how with the NASDAQ really opening up the door to the downside, DocuSign still kind of holding in there pretty well. Now, that's key for investors at this point, because you can see holding in there is what they really at the very least want to do after some of the selling that Mike mentioned after earnings. And keep in mind, though, that selling really started the week before that earnings disappointment there and the move lower down to 131. So again, considering the broader base selling we're seeing today and the initial move lower to 131, I think investors can kind of gain confidence in this range that's been forming down here. A quick look into DocuSign in terms of not only, again, that earnings move lower that we talked about the move, how it started a week before, but this was part of a bigger move off that 315 level down to 131. Here you can see that, again, 315, the earnings gap lower, and this is what Mike's talking about, everybody, that a lot of open air here in terms of if we could regain momentum or composure here, get up above 160, 165, ultimately open up the door to the upside. There's some room to run, but again, the big key word, if and was, and I mean, it's got a little bit of, proving itself to do here. And I think when you see a big gap lower like that and a little sideways consolidation, it tends to be reflective of how investors are trying to regain composure at this point and figure out what to do next, not necessarily jumping in and saying, hey, this is a great buy opportunity.
Yeah.
I think that would look more like a V-bottom type pattern.
Okay, so we'll watch for that. I mean, theoretically, it could do that. It could do that. Thank you both. Nice to see you. Mike Shorr and Ben Lichtenstein. Thank you. Great big three today here. We had DocuSign and Cloudflare and Activision. Mike Shorr, Prosper Trading Academy. Thank you, Ben Lichtenstein. Nice to see you. Thanks.
Thank you very much.
Coming up,